We've got Mr. Chaudhary here with us from the State Bank of India. To begin with, looking at the macro picture, Mr. Chaudhary, we had all these positive announcements coming from the center beginning mid-September. There is not yet much action on the ground, and it may be a little unreasonable to expect it to start right away. But are you concerned that no action on the ground is again going to lead to sentiment getting affected?
No, I would not say that. Market sees more the results. So the positive announcement that have been made helped the capital flows, and the rupee parity has also stabilized. But I think the data that the market would look forward to are the IIP numbers and the growth numbers. So market would assess what the IIP numbers are currently, and also make an estimate what they are going to be going forward. And based on that, the outlook for growth would be finalized.
RBI in the last policy, in the October policy, cut the GDP forecast. They've raised the inflation forecast. So do you believe that the challenges before us continue to remain, that things are not going to be so easy, at least for the next 3 to 4 quarters?
I am not quite sure to what extent the interest rates affect the prices of vegetables and rice and wheat. But why I always pitch for an interest rate cut is that it spurs investment, brings in capital goods investment, improves supplies, and thereby could put a downward pressure on the prices. But we have seen in the last few quarters, raising the interest rates very sharply did not significantly dent or did contain the inflation scenario.
But at the same time, you have a fairly high fiscal deficit projected for the government. You have large government borrowings coming into the market. This whole concern about crowding out of private investment. Given all of that, how do you see the interest rate picture playing out in 2013?
No, what I would say that you don't look at the scenario and then decide the interest rate cut. In fact, the approach could be that you decide what the interest rate would be and how does it affect growth. So we have seen that a slightly lower interest rate environment would be definitely positive for the investment climate and particularly for the capex cycle to improve.
On the credit growth front, how do you see the remainder of the year panning out for State Bank of India?
The growth outlook looks very slow and modest. I think in the commercial lending sector, the pipeline is almost dry. So we are trying to grow on the consumer finance sector, particularly on the home and car loans. So still we are maintaining a target of about 16 to 18% of the loan growth on rupee side. But another thing is happening is that many of the good companies, particularly PSUs, are substituting their rupee borrowings by dollar borrowings. So it will also be a function of to what extent the dollar borrowings substitute the rupee borrowings. But we are doing everything possible because we have got the resources. We have got the resources at optimum price to get to a loan growth or asset book growth of 16 to 18%. If it happens through commercial route, that would be much quicker and faster. But if it happens through the retail route, it would take a little longer.
Looking at the credit growth picture, you've said that the loan growth on the large corporate accounts front is still looking a little difficult. But in the quarter under review, the second quarter, you actually saw some growth over there. So what would you attribute that to?
Oh, no, this is due to the drawdown that has happened on the previous sanctions. So the loans which were sanctioned earlier as the capex is getting implemented, so these loans are getting drawn. But for that to happen on a sustained basis, you need a strong pipeline. Because what were yesterday's sanctions are today's disbursals. If today's sanctions are not very strong, what happens to tomorrow's disbursals?
There's a lot of concern about the asset quality at State Bank of India. In the first quarter, we saw slippages at the 8,000 crore plus level. Second quarter, it's come down. But going forward, where should we expect this whole picture is going to play out as? Can we expect this is going to taper off, or do you believe the problem will persist?
I think it's a function of the overall growth in the economy and the trends in the economy. So from first quarter to second quarter, we think we have been able to compress the net slippages from 8,000 to 4,000 crores. But I think the asset quality issues should not dominate totally the results. Because if you look at the results, our quarterly profits have now stabilized between 3,500 and 4,000 crores, which used to be around 2,500 to 3,000 crores. So we think it's a quantum jump of 40%. Asset quality issues we manage as we go along.
On the asset quality front, you have said that you fully provided for your exposure to Kingfisher Airlines. Last week, at the end of the week, we saw a big deal announcement within the UB group where the promoter company is getting a large amount of cash. At the same time, the promoter has said that he's not going to cross-contaminate any of his businesses. How concerned are banks about the possible reluctance maybe of the promoter not to bring in money to fund the airline? What steps would you be looking to take?
See, it is not right for me to discuss individual companies on a TV channel, but for the SBI, Kingfisher 1200 crore exposure is fully provided for. So from here on, there can only be an upside and not a downside. And Kingfisher being talked about so much in the national and international media, I am quite sure that the company management would do everything possible to revive the company.
How about Suzlon?
No, Suzlon is in a different position because Suzlon has I would say, a fairly robust demand outlook. It is in the clean energy business, and till such time the oil prices remain over $100, there is good demand for this product. But I think Suzlon's problems were that their receivables come in with a lag, with a time lag, but their liabilities were more of short-term nature. So if the company is able to what is called term out the liabilities, that increase the tenor of their liabilities, they should be all right.
Looking at your agri-loan portfolio, there is, you have said, some amount of stress over there, but what's the outlook there? Do you expect things to improve?
Finally, I think the Kharif harvest has been pretty good, so the recoveries are coming in, although with a bit of a delay.
Yeah, but how about the NIM picture? Where would you ideally like to see your NIM settle at? And are you happy with what you've been seeing so far?
Oh, everybody would like to see a high NIM, but our NIM domestic has still come in at 3.76. And if you make a comparison with even PSU banks and the private sector banks, except one, the NIMs are possibly the highest. But what the market got used to is slightly higher, a 10 BP higher NIM, which did not happen because the second quarter loan growth was poor and we had good deposit accretion. So it's not always possible to match the loan growth and the deposit growth. So loan growth slow was a little surprising for us. But we think the NIM going forward should stabilize at 3.80 and not slip below 3.75 on the domestic side.
But on your international front, the NIMs are significantly lower. And just looking back to what your predecessor had spoken of in terms of his vision for State Bank of India, he had said that he'd ideally like to see the international operations contribute something like 25% of revenues for the bank as a whole. Are you on track to going to that level, or do you expect that that's not where the picture is going to be?
No, we would not target revenues alone, because revenues without profit is not very useful. So our ROEs on international businesses is about 15%. ROE on domestic business is about 18 to 19%. So ROE on domestic business is significantly higher than on the international business. But the statement was made in the context of huge global acquisitions, particularly the two Tata Group acquisitions that were made at that time. Now that scene has changed significantly because that was the year when the Tata acquisitions happened, the Bharti acquisitions happened. So that gave a lot of opportunity to our foreign offices to plug into those transactions. But those scale of transactions and the number of transactions have also come off, particularly after the slowdown in Europe. So this will continue the way it is.
All right. So on the NIM front, my question really was on the lines of the international operations having a lower NIM, which was pulling down the average. So should we expect that that is a trend that is going to continue to play, or should we expect that the domestic operations can actually help pull up the NIM picture?
So in domestic business, NIM is more important, and the other income is not as robust, and the delinquencies are higher. International business is very different. The NIMs are typically between 1.5 to 2. They never go beyond 2. But the delinquencies are low and the other income picture is higher. So characteristically they are very different. So at the end of the day, we measure it by ROE rather than measuring it by components.
Presently, in terms of the credit growth you're seeing, what percentage would you say consumer growth is accounting for?
Consumer growth is accounting for more than 50%. And that trend has accelerated in the last 2 months. Because in the last 2-3 months, when Reserve Bank of India cut the CRR and we cut the base rates, so now the rate of interest, particularly for home and car loan, proved to be very attractive, and the festive season has spurred a huge offtake in the home and the car loan segment.
On the base rate front, can we expect another cut from SBI anytime soon?
Possibly, but I would not preempt that, because our asset liability committee would be meeting very soon, and we have the October numbers of net interest margin. So we'll assess to what extent there is room for a cut. I can only say that the possibilities of cut are much higher than the possibilities of an increase.
So that doesn't answer the question. So last we had a CRR cut the last time from the RBI in the October policy. Post that, we've not seen you tinker with the base rate, and you've also spoken about credit growth, especially on the commercial side, looking a little difficult. So all of these factors combined, would you say there is a strong case for State Bank of India to be lowering the base rate sometime very soon?
See, in our bank, the decision is in a collective mode. It is taken by the Asset Liability Committee. But to put in perspective, the CRR cut has increased our annual profitability by 200 crores. But that has almost been neutralized by increasing the provision on restructured assets from 2% to 2.75%. So that has taken away 275 crores. So net, the impact on net interest income of the bank from these two measures is almost neutral. But why I said the Asset Liability Committee would meet, because the CRR cut has kicked in from the first week of November. So we'll assess the NIM for October, and then when we feel confident that this kind of cut or possibly refixing the base rate can be sustained, so that would be the decision we'd take. But I think it would be known in next week or so.
Right, now, again, on the deposit rates front, your ability to cut lending rates is not going to be so easy if deposit rates continue to hold up. And again, to the extent that the small savings rate at 8.5% stands in the way, do you believe that lowering deposit rates is going to be a bit of a challenge, and at the same time maintaining your margins?
At this point, we have no option, because, you know, as you rightly said, our deposit rates are already at 8.5, whereas most other banks are higher than that. So SBI can't go lower from here on the deposit rate, because then it falls short of what the small savings are offering. So you are very right that the room for deposit rate cut is hardly there.
So the room for a base rate cut is also there, but very limited.
Base rate cut, we'll see that what kind of income we are generating from the drop in the CRR. So, but still, because, you know, base rate cut, what happens is when you cut the interest rates, it could generate a higher volume of loan demand, which we saw in the last 2 quarters. So when we cut the base rate, if the loan demand grows, so there is asset substitution. The assets which are now in commercial paper or CDs, if they move on to loans, they generate a higher net interest income.
You know, Mr. Chaudhary, you've been saying that you are on track to achieving a net profit number of something like 14 to 15,000 crores for the current financial year. Would you say you are on track to achieving that, you know, Q3 and Q4 can actually turn in the sort of numbers to be to support that prediction?
Certainly, because we did a net profit number of 11,300 last year, and we projected 15,000 crores, which is an increase of approximately 35%. And in the first half itself, we have done 7,400 crores. So we think 15,000 crores is almost within reach. And on a consolidated basis, similarly, we are looking at a number of about 19 to 20,000 crores, which would make us possibly the third most profitable company in the country after ONGC and Reliance.
Given that, you know, you're throwing up such a large net profit number, would you still require capital infusion from the government in March?
Possibly as a matter of abundant caution. And secondly, government also wants to give a message to the international community. The State Bank of India would remain well capitalized, much beyond the minimum threshold levels for all points to come. So therefore, the additional capitalization that is contemplated, it's not so much to maintain the regulatory numbers, but to demonstrate government's commitment towards SBI in terms of capital.
And what is that figure?
Currently, a number of about 4,000 crores is being talked about.
Sure. But last year, you were making presentations to the government for a large capital infusion, you got something like only half of that, what you were asking for. So do you still believe you will get the additional capital that you require in this financial year?
No, quite the opposite. Last year our tier 1 capital had fallen below 8%, 7.67. So infusion of capital was very urgent, and finally we got 7,800 crores, which is a very, very high number, and we are extremely grateful to the government that out of the total budgetary provision of 15 to 16,000 crores, almost half the amount was made available to State Bank of India.
Sure. So this year, considering that the government's projected revenues from disinvestment and 2G sales may not happen, why do you still stay confident that you'll get the money, especially when you don't need it from a regulatory front?
No, it's not that. Government also has to send out a message. And secondly, the total bank capitalization, even if it were to happen, the highest number is being talked about is 15 to 20,000 crores. Now, here is a government whose total revenues are 10 lakh crores. So 20,000 crores seen in context of 10 lakh crores is almost 2%. And I may also, mention with all humility that this is exactly the amount, or in fact the banks put together pay a much higher amount of income tax to the government. So whatever the government puts into the banks comes back manifold back to the government, A, by way of taxation, B, by way of dividends.
So aside from the government infusing capital, would you be looking at independently raising money from the market, either through the QIP route or anything else, in the next financial year?
We have room for that, but what kind of decision and what kind of QIP is to be done can be finalized only in consultation with the government, because they are the majority owner.